Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. We're going to talk about a couple of more aggressive growth stock picks now with Bill Wilton, our aggressive growth stock strategist at Zacks.com. And Endo Pharmaceuticals is one company that you've written about recently. They make and distribute branded and generic drugs to treat and manage pain. Is that their focus?
Yeah, they're kind of honed in on the pain management aspect of pharmacology. They just reported their quarterly results about a week ago on February 22nd. They did see a 13% increase in revenue, which is excellent. Net income was up more than 100%. Obviously, that's fantastic. And their earnings per share came in 13 cents ahead of expectations. We love to see those earnings surprises. The more often they surprise, the better, obviously.
Right.
We call this an aggressive growth segment, so it was nice to see the CEO's comments. He actually
is aggressive.
He said that they are committed to an aggressive growth aspect for 2010.
Cool.
So that's obviously played pretty well.
Right into your hands.
Yep. And here you can see that the market really took took a liking to those the quarterly results rather. Shares jumped, high volume, excellent, which is what we like to see. And the stock maintains its #1 rating, also a great indicator. And the valuations are pretty great. The PEG ratio you can see here, it's about 0.73, which means that we're getting that growth at a pretty good price there.
All right. Maximus, Inc., MMS, the ticker symbol, specializing in health and human services, you've written about recently as well. What part of health and human services?
Well, what they typically do is they provide services to, namely the United States government, but also other governments around the world. They'll kind of like a healthcare management aspect, the software dealings like that. They just re-upped their contract with Medicare and Medicaid. That could approach $30 million. It's a pretty big contract for them. They reported their quarterly results the beginning of February. They saw a 19% bump in revenues, which is good. Earnings per share came in at 83 cents, which was 19 cents ahead of expectations. They also raised their guidance, which, in turn, usually when management raises guidance, the analysts are not too far behind that, ratcheting up their estimates. So things are looking very well for them. Also maintaining their Zacks #1 rating, which is fantastic. And they've got one of those great looking charts. If you take a look at this one, you love to see it head up to the upper right corner.
Up, yeah.
So it's low volatility, volume's nice, and they're just trending in the right direction. Everything seems to be going well for them. Their valuations are pretty decent. They're trading at about 16, 17 times forward earnings, which is a pretty good valuation where we're at in the market right now. So,
all right. Do you own either of these two?
I do not.
Check out more Zacks Rank Buy stock pick ideas for yourself on our homepage at Zacks.com. In the upper right-hand corner, where we put 4 new ideas up there for you daily, one in each of the investing categories that we write about. With Bill Wilton, I'm Terry Ruffalo.